Good morning, everyone. Thank you so much for your time this morning, Ken. We're excited to have you speak once again to our real estate family. And Ken has over 11 years experience and has opened his own firm and is going to talk to us about everything taxes, especially what we need to know about COVID and this upcoming tax season that we are currently in. So welcome and thank you. Good morning, everyone.
Morning. Ready, set, go. Okay. Thanks for having me again. Appreciate it. I think this is the third or fourth time I've talked to the Keller Williams family. I have quite a few Keller Williams agents clients, and we do good work for you guys. And I really care about my clients, and I want you to succeed. And hopefully I give you enough tools that not just keep you above water during these fun times, but hopefully give you some stuff to succeed and stay organized. So we're going to go over quite a few things this time around. These are the main topics today. Some of the things that are going on in taxes, the SBA loans that are still out there for you, as well as just some tidbits, some life hacks on how to keep organized with your expenses and income. So we'll touch on quite a few things, and I'll stick around for 20 minutes or so after I finish to answer any general questions. Oh, I know what I need to do. Share screen. That might work. There we go. Everybody got my information down at the bottom. Hopefully you'll get at least a little something out of this. There's something in here for just about everybody, no matter if you're a Schedule C or an S Corp or C Corp. Entity structure, we'll touch on that just a little bit. But the main point of anytime I give a talk like this is, obviously I'd like to pick up a new client here or there, but it's more to get the information out. There's a lot of information out there that has been lost in the shuffle with all the crap that's been going on this year. So just trying to get information out there, whether you use me or another tax guy, it's always really important, especially for you as realtors, to have some sort of organization and have somebody on your team that you trust that can manage your taxes. I tell my clients, you just go make money and I'll figure out a way to hide it for you. So there's lots of things you can do that, and having a good guy is half the battle. So I am an enrolled agent. I'm not a CPA, I'm an enrolled agent. We do full service enrolled agents. Basically what we are is we're the highest level tax preparer you can get. We outrank CPAs according to the IRS, and we do a lot more representation work than a CPA, some back tax issues, offer and compromise. The guys you hear on the radio that you have back tax debt, that's what I am, but I have my own firm. So tax preparation, obviously the biggest part of our business, but we do small business accounting. I have some experience in CPA firms. So I know how to do, and I have an accounting degree, so I know how to do bigger accounting. I have a couple bigger manufacturing clients, but most of the people I deal with are realtors like yourself, insurance agents, landscape architects. I have a couple of restaurants, smaller business, and we do all kinds of services for that. So I'm right up your alley is for helping you out. This is my specialty is you guys. So jumping right in, tax season starting. February 12th, this Friday, is the first day of opening day. We're allowed to e-file tax returns. We've probably got about 40 of them already prepped up, ready to hit the button to go. It was delayed this year. Normally it starts second or third week of January, but the stimulus checks delayed the IRS. They were more worried about getting the stimulus checks out and there are, I'll get to some of the reasons why the stimulus checks are important on the tax return, but that delayed things until this week. So we're going to have a 10 weeks of hell trying to get everybody in before the April 15th deadline. They have not said anything yet about extending it from April 15th any further than that. As you know, last year they moved April 15th to July 15th. So we'll see if, God willing, we'll get through some of this pandemic and we won't have a delay, but I like my Junes to play some golf. So hopefully we're not extended out to July again. So we'll see. As always, though, whether they extend the deadline or not, taxes are always due on April 15th. You can extend your tax return. but it does not extend the amount or time of when you have to pay your taxes. That's always due April 15th. So, if they move that deadline to July 15th like they did last year, then obviously I'm speaking out of turn there, but April 15th is the deadline to pay your taxes, not necessarily to file. And there's still time. Your doctor may say exercise, lose weight. Your tax guy says make sure you make your estimated payments. Whether or not you listen to our advice is up to you, but estimated payments are always a good thing to do. It's a planning tool to make sure you're not hit with a $10,000, $20,000, $30,000 tax bill on April 15th. Pay a little bit as you go, and I'll get a little bit more on that later on in the presentation. But feel free to make an estimated payment anytime until April 15th if you'd like to. I put this in there just so you understand what an estimate is and how much you think you should make. I just got off the phone with someone earlier. How much should I pay as an estimate? If you look at your 2019 return, your 1040 return, on page 2, line 16 is your total tax, or that's how much you paid in 2019. You may have gotten a refund, but your total tax was a certain amount on that line 16. So you can look that up on your tax return. And there's something called a safe harbor, where if you don't pay estimates of 90% of last year's taxes, there could be a small penalty. Usually these are relatively small, but if you're getting big commissions, this could be a pretty substantial. If it's 5% of $10,000, it's $500 that you're just throwing out the door. And the IRS loves to nickel and dime you. It's my job to try and mitigate those nickel and dime fees and penalties. So just estimates are a good thing, I promise. So I'm starting with some of the stuff that are fringe tax related stuff. The stimulus checks, I put this together based on the questions that I've gotten in the last 9 months. So what's going on? And the last 9 months has been stimulus checks. Where's my refund? What's the PPP loans, EIDL loans, all that fun stuff that's been going on that are kind of fringe areas of tax. But I answer these questions to try and help you guys out as much as I can. So the stimulus checks, obviously there was the first one, $1,200. You got it somewhere between April and September. And most recently, January here, everyone got another $600. Every individual did. Even kids got $600 this time around too. So what it actually is, and this is kind of geeking out, but it's not really a stimulus check. The economic impact payment is a credit on your tax return. On your 2020 tax return, every single person that has their tax return done needs to reconcile how much they got in stimulus payments. So it's one more form for your tax guy for every single person this year. What it basically means is there's a credit line on your tax return. And if you didn't get enough, or you didn't get your stimulus payment at all and you qualified for it, you actually get it as a credit on your tax return. Okay. And an interesting tidbit here, if you got too much, you don't have to pay it back. And I'll use myself as an example here. I'm divorced. I have 2 kids. I get to claim 1 kid every other year. So in 2019, I got to claim my oldest daughter. I only got the first stimulus check based on me. I got $1,200. But this last stimulus, and a couple weeks ago I got it, was $1,200. So I got it for $600 for me and my daughter because she was on my 2019 return. I don't get to claim her in 2020. So my 2020 tax return, I'm going to say I got $1,200, but I don't have to pay that $600 back for getting my daughter's stimulus check. And I'm probably not going to give the $600 to my ex-wife, just saying. And the reason I'm not going to is because my ex-wife now is going to claim my daughter, and she's going to say, well, she only got the $600 for her. On her tax return, she'll end up getting the extra $600 that actually went to me. So I don't have to pay it back, and she gets to get the $600 on top of her. So we're actually making out on the deal. It was not on purpose. I'm not trying to play the system. It's just how that's working out. So nice that they're not making people repay it. And that goes for like dead people too that got stimulus checks. I had 7 dead clients last year that got $1,200, and they're obviously not going to file a tax return. There's no way to pay that back. So from the grave. So it kind of just they threw out money and sorted out later kind of thing. And the sorted out later is some of it's happening, some of it's not. There's the chart for the second round of stimulus payments there. Everyone got $600, like I said. It was the same AGI as adjusted gross income. That's also a line on your tax return. And that's an important number for you to know in your life. That's credit cards, mortgages, everything's kind of based on what that AGI is. If you made over 75,000, it got smaller and smaller up until you hit 87,000 on your 2019 tax return. So if you made over 87,000 on your AGI, you didn't get anything this second time around. I had a client call me a couple days ago, and he says, "What's this $2 stimulus check that I got?" And it was because he was really close to that $87,000 limit. He got a $2 stimulus check. So it's funny things that are going on in the tax world there. If you have, if you're looking for where your stimulus check is, irs.gov, right on the top of the screen. I'm gonna switch screens here. Can you see the irs.gov, Tony? Or didn't share? You can see the IRS website here. Okay, so right at the top here, get my economic impact payment. If you click on that, it'll tell you all you need to know. There's a lot of question and answer, frequently asked questions on there. I'm just going to do my get my payment just so you can see what you're looking at. Type in my social, my birthday, 20374. I just got 1 year older last week. My mailing address, I hit continue, and there it says my first one was direct deposited on April 15th, $1,200. My second one included my daughter, and January 6th is what they said it was going to be mailed to me. I don't know why I got a direct deposit on the first time around and a check the second time, but they didn't even send a check. What they did was, you can see my screen, they sent me a debit card. All right, so a couple things on the debit card. We're back to the slideshow. You see the slideshow? Yeah. Okay. A couple things on the debit card. There was no rhyme or reason as to why they gave anybody a debit card, a direct deposit, or a check this time around. I have not figured it out yet. But the debit card, if you got one, you know that you had to call in and activate the card first. And then you can go onto the website for the card, eipcard.com, I think it was. And you register the card, and then you can just transfer it over to your bank. It was a pretty slick system, worked pretty well, got the money the day after I got the card. But you saw that I said I got mailed on the 6th. I didn't actually get it until the 27th or 28th of last month. So it caused a little bit of a delay, but still got the money. And when you call in to activate the card, they said that you don't need to keep this card. I'm keeping it just in case. They say they're not gonna reload it. They're gonna send you a new card if there is another stimulus check. And I don't want to get too far into that because that information changes daily on how much and when they're going to get another stimulus out. But we're expecting something between $1,400 and $2,000 in the next couple months. We'll see. Anyway, also irs.gov is a great spot for newsroom items, lots of changes. If you do have problems, how they're handling reissuing payments, things of that nature. So we might want to keep an eye on that newsroom there. All right, I'm going to touch on unemployment because this one is very common this year as well. The pandemic unemployment assistance was a federal program that added to unemployment. Normally, just the EDD gives you a base amount. As you know, self-employed people, contractors, got first time in history that they could apply for unemployment. They extended that out December 27th, and you'll hear me talk about that bill a lot, that December 27th bill. It was not a stimulus bill. It was the omnibus spending bill that they do every year. they had a little problem on December 27th, the EDD, because they weren't ready to add 11 weeks yet. So you may have had to go in there and call them and reopen your claim if you still had some money on it. That caused a few problems, but it added 11 more weeks. So now it's up to 57 weeks you can stay on unemployment, just over a year. And they upped they reinstituted the extra $300 of PUA. So if you're a self-employed contractor, the minimum you're going to get is $167 from the EDD, and then $300 on top of it. So you get somewhere between $467 and $750 is the max for unemployment. If you're thinking about doing this, re-upping or continuing on your unemployment, I'm all for it if you need it. If you're struggling, obviously that's what it's there for. But keep in mind that unemployment is taxable. So, and they won't hold enough. So give you an example. Again, I'm gonna use myself as an example. I qualified for $150 from the EDD, and then I got the $600 early on when I was unemployed. So I got $750 a week for about 8 weeks, 10 weeks. They only withheld the 10%. I chose to withhold. They only withheld 10%, but they only withheld 10% of the EDD portion. So $150, 10%, $15 is what they withheld for a $750 payment. You're talking 2% withholding on $750. That's going to be a problem for a lot of people. And I was doing the responsible thing of withholding. There's lots of people I've already talked to that didn't withhold at all. And the lowest tax bracket is 10%, and they're only withholding 2%. That's a problem. I expect a lot of people who were struggling all year, who were on unemployment, to probably owe some money because of this unemployment this year. So it's not going to be a fun year for lots of reasons for tax guys giving out bad news. That's not generally my jam. I like giving out good news and big refunds, but it's going to be interesting this year. It's also a lot more difficult to apply. If this is your first time, if you're deciding, things are struggling, I haven't sold a house in 2 or 3 months, I'm going to apply for unemployment. I had a lady that her business is shutting down and she's going on unemployment. Her husband's in the hospital, intubated. Doesn't look like he's going to make it. So I had her go on unemployment. We were trying to apply together. We're two pretty intelligent people trying to get through this. And they've gone so far as to upload your driver's license, take a selfie to verify yourself to the driver's license. It has gotten really, really difficult to get this unemployment. So, and that's what, $30 billion of fraud will do. A couple of bad apples ruin it for the rest of us. It took us about an hour to apply. And I'm going to say this kind of rudely, but I don't know how a dumb person is going to get through that. We had two intelligent people sitting there for an hour trying to get through the system, and it was a pain in the neck. So, and on top of that, we finally got it through, got it done. She got her letters, and it says you're going to be 4 to 6 weeks out before you get anything. So, EDD, obviously you're listening to the news, it's a mess. They're trying to keep up with the demand. They're not built for 10 million people being on unemployment. So, well, if you're going to do that, just take heed for some of those things that I just mentioned. So what to bring to your tax appointment? I've already mentioned most of these things. The stimulus check, I need to know the actual amounts of the stimulus checks you got, because there is a reconciliation form. If you say you didn't get it, but you did get it, you're going to get a credit on your tax return, and I'm expecting you to get audited pretty quick. That you already got this payment. We showed, the IRS will fight you on that. This notice that I'm referencing is the notice 1444. This is that fun letter from the President Trump that you would have got last year. My conservative friends have framed it, and my liberal friends probably threw it out, but it's there. You don't necessarily need to bring that to me, but you need to at least have the exact amounts of what you got for stimulus, because we have to do a reconciliation form. Covered California, if you have self-employed health insurance through Covered California, the 1095A, and now there is an associated form for California, Form 3895. Now, if you weren't aware, I hope you were, the Trump tax laws 4 years ago got rid of the mandate you don't have to have health insurance. California raised their hand and went, hey, we like penalties. We're instituting the mandate. And so now there is a penalty for state of California if you did not have health insurance in 2020. So if you had covered California, you're going to get 2 forms this year. I need both of those forms. Again, there's a reconciliation form. They made me the stimulus check policeman and the healthcare policeman. I'm very excited about that because that's exactly what I signed up for when I wanted to do taxes. Make sure you have those forms. Inevitably, I'll ask everybody, did you have health insurance last year? And they say yes. Did you have covered California? No. Sometimes people don't know they were on covered California. So just take a peek, make sure, because it does cause audits and letters and me filing extra forms later if you don't bring that in. Of course, unemployment is taxable, like I said, so there's a form 1099-G. You can find that on your EDD website login if you had unemployment. They should have already mailed you something as well, so that make sure you bring that in to your tax guy. And then you might have noticed, I don't know if you guys got your 1099s yet from Miss Colleen, but the 1099s changed a little bit this year. They are 1099 NEC. It stands for non-employee compensation. And all they really did was split out the 1099 miscellaneous. There was one box for non-employee compensation, and they made their own form with it. So now the 1099 miscellaneous is for lots of other different things except for contractor work like yourself. So it's a new form. Don't be surprised by it. You'll notice too that it might be a little bit more, your 1099 is generally going to be more than what hit your bank account. So all of my clients, I have them bring in their statement from Golden Ticket with all the things that Golden Ticket took out of your checks. So your 1099 might be higher. If I'm doing bookkeeping, I'm only seeing what's hitting the bank, your deposits. And there's a difference there between your 1099 and your commission statement. I need to be able to reconcile that and get those expenses that were taken out of your check and put them on your tax return, because you're getting a 1099 for all of it. If you have a business, which every one of you do that gets a 1099, you have your own business, whether you're a Schedule C sole proprietor, or you've formed an entity of an S Corp or a C Corp, every one of you need to tell your tax guy, one, I care about you, but two, if you had COVID, you need to tell me, because there might be some benefits for you. Specifically, the Form 7202 is I'll get into it in another slide here, but there might be some after the fact stuff that you might be able to claim credits on in your tax return if you had COVID. I'll go into the qualifications for that in a minute, but that's I'm going to ask you if you had COVID, so because you might get some sort of relief after the fact here. If you got a PPP loan, I need to know that. I'll get into that a little bit more. They just made it non-taxable. I'll throw the balloons and the confetti a little later. If you got an EIDL loan, some of these things we'll be talking about. If you did make a payment, the interest is taxable. Or sorry, the interest is a tax deduction. So you want to bring in that statement, and make sure your tax guy knows about your health insurance premiums. They are deductible both for self-employed contractors, Schedule Cs, and S Corps and C Corps. So we want to make sure we get that tax deduction as well. All right. I always include this slide whenever I give a presentation to whomever I give a presentation to. And that's the difference between an employee and an independent contractor. In your guys' case, I would see, actually some of your people, excuse me real quick. Cassie, can you shut that door? Can you shut that door? Employees or independent contractors, the main culprit that I see in your industry is you get a person that haven't gotten their license yet, and they're working under you and you're giving them a cut of your commission as a helper or as an apprentice of some sort, but they don't have their license. If they don't have a license, they're actually an employee. You're not supposed to be 1099ing them. So independent, the definition of employee has been brought out to about 20 different questions now. It's called the ABC test. And it all is based on, do you have control over this person? So do you pay them by the hour? They're an employee. Do you supervise their work? They're an employee. Do they work 9 to 5? They have a set schedule. Do they use your computers and equipment? Are they working under you? Do they not have a license, but they're working under you? They're an employee. And you need to run payroll for them. We do payroll here. We don't charge a whole lot for it. It's not a big profit center for me, and quite frankly, it's a big pain in the neck for me. But it needs to be done. And if you get caught giving 1099s to someone that should have been an employee, you're talking about $5,000 to $25,000 worth of fines plus back payroll taxes. So make sure you're doing things right. I have seen these audits, these EDD audits, that what AB5 did really was change the onus. You used to be able to just 1099 anybody, and then if you got audited, you had to prove that they were a contract. They had to prove that your person was an employee. Now it's different. Now everyone's an employee, and you got to prove that they're a contractor. So they changed the onus of how they audit, and you're less likely to get by because more people are under your control than you think. And before we get into all the loans and the relief packages out there through the SBA, I want to just touch on what exactly payroll is. And this is surprisingly a lot more complicated than it is. People make it more complicated than it is. It's not. Very simple. If you pay payroll taxes on money you give to someone, then it's payroll. You got to file the forms, pay the taxes, then it becomes payroll. Too many times I get S Corp owners coming in and say, yeah, I took a payroll. Oh, show me your payroll tax form. Show me your W-2. Well, I don't have one. We didn't do that way. Well, that's not payroll. You got to pay payroll taxes in order for it to be called payroll. And a lot of this stuff that I'm going to talk about is based on whether or not you had a payroll. Transferring money from your corporation, that does not constitute payroll. That is just a distribution, a draw, or a dividend. It's not payroll. All right. So now that that's clarified, here's what I'm talking about. Some of the after the tax form, after the tax relief stuff that's going to be on your tax return this year. If you're a Schedule C sole proprietor, this 7202 form, if I asked you if you had COVID this year, you tell me how long you were sick or couldn't work. There's 3 categories, and there's different relief packages for each category. If you had COVID, if your family member got COVID and you had to stay home to take care of them, or if your kids were out of school, your school was closed and you had to stay home for childcare purposes. There's 3 different categories, 3 different size relief packages. I'm not even going to pretend that I know the calculation. That's what I had paid big money for my software company to do. But if you tell me, just an example, you had COVID and you couldn't work for 2 weeks, what that calculation is basically going to do is going to take your net profit on your Schedule C and divide it by 2,000 hours, and then times 80 hours. You basically figure out what your profit was. That turns into salary, and you get 2 weeks worth of benefits on your tax return as a relief of after the fact. So bottom line, tell your tax guy that you had COVID, or if your family member had COVID, there might be quite a bit of relief. If you're an S Corp taking payroll, we might be able to go back and adjust your payroll forms and take a credit. I have a feeling the next 4 to 6 months, I'm going to be doing a lot of amended payroll tax returns to try and get some credits after the fact. So make sure you tell your tax guy about your COVID experience. I'm sure that's a talking point all year anyway. So that's quite a few things I'm going to be talking about with my clients as they come in. So let's jump in. That's PPP loans. The whole program, and again, PPP, it is payroll protection program. That's why I went over that payroll slide with you. It's based on your payroll. Sole proprietorships, you file a Schedule C. Your net income, revenue minus expenses, equals your profit that shows up on your tax return. Your net income profit is what they base the PPP off of. And why I put that little note in there, play the game two ways. I had an agent come to me recently. They wanted to apply for the PPP loan. They are a Schedule C. What my goal in life is to lower your taxable income. So you get your revenue. I'm going to find as many expenses as I can to lower that commission checks of yours and get the lowest taxable income I can get. That's my game. If you want to play the game and try and get a PPP loan, I've got to show more income, and that's going to raise your taxes. Now, I did a little calculations for this young lady that what if I just show $30,000, $36,000 in revenue and don't put any expenses against it? Well, you're going to, you're looking at probably about $7,000 in taxes that you're going to end up paying on 36,000 at least. And the loan you qualify for at 36,000 would be 2.5 times of 36,000 divided by, here's the calculation, 36,000 divided by 12 months is 3,000 times 2.5. You're only talking about $7,500. So you're basically creating a tax bill of $7,000, $8,000 to get a $7,000 loan. That doesn't make much sense to do that. And that's why I play the game one way. You either lower your taxes or you do everything correctly and take advantage of some of these programs that are out there. One way. S Corp, C Corps. Obviously, you've got payroll there. Hopefully, S Corp owners, you really do need to take a payroll. If you're an S Corp, you have to take a salary. That is the one thing. If you're not taking that, don't bother paying for payroll or applying for a PPP loan. But more importantly, you're looking at probably getting audited for not taking a payroll. So it's the only thing an S Corp gets audited on is if you paid your officer a salary or not. So make sure you do that. Obviously, yes, if you keep your payroll going, you apply for the PPP loan, you keep your payroll going through all of this, you can get that forgiven, and then it turns into free money. So we'll get into the free money part in a second here. If you're going to apply for a PPP loan, you have to go through your own bank. In other words, if you're a Chase client and you try and go to Bank of America to get a loan, they'll make you walk out the door. They won't humor you. There are third-party lenders out there. My favorite is lendistry.com, lendistry.com. Cabbage with a K is another one. And there's a couple other places to go if your bank's not cooperating. We ended up having a problem recently with Bank of America, and I know Wells Fargo, the initial loan last year they were a month and a half behind everybody else. So I had a lot of clients end up going to Lendistry and Cabbage. And all of this is done online now. Before you had to do a form, do all your calculations and send in a form. Now everything's online, and the main thing you need to know is your monthly average. What is your monthly average? So again, if you're a sole proprietor, it's your bottom line of your Schedule C. And then divide that by 12 months, that's your monthly average. Most of the banks want to know that number. Now, you can include a couple things in this net income. All right, so you can include health insurance costs now. You can state payroll taxes as a part of it. If you're self-employed, you obviously don't have that. But if you have some sort of 401k, a company match, something of that nature, those can be included on if you pay bonuses to or employee reimbursed for education. Those can be calculated into your monthly average. Okay. So eligibility, I'm a little frustrated with this one. First draw, there's first draw and second draw. So even right now, you can apply for your first time PPP loan. I just did mine 2 weeks ago. after they made it non-tax, after they made it tax-free, I went, okay, I've got payroll. I'm going to take this. It would really help at this point. As long as you're in business before February 15th of 2020, you can still take your first draw. Some of the banks, banks they're all kind of have their own glitches and their own way of doing things. Like I said, everything's online, but some of the questions are different for each. So Bank of America, yeah, a couple days ago, we were applying for a first draw for somebody, and they wanted to know the qualification of the second draw, that second dot there. Are you able to demonstrate a revenue reduction of 25% or more in any quarter when you compare 2020 to 19? So if your first quarter revenue, not profit, your first quarter revenue or second quarter revenue in 2020 was 25% lower than 2019, you get to qualify. And a lot of people have. Now, you realtors, you've been going nuts last year, most of you. So it might be harder to get that second draw. And of course, you've got to be able to demonstrate that. You probably need some bookkeeping. I'm not a big fan of giving bank statements. You might be able to use your commission statements because it's just based on revenue. So 19 and 20 revenue, and then break it out by quarter and see if you qualify. That some banks are asking for that for the first draw, which is not according to the rules. It kind of ticked me off. But anyway, there's your eligibility chart. And interesting on you must have qualified for full forgiveness for round one. Most of the banks are not letting you do forgiveness forms right now. They had a window where you could get forgiveness, and then they shut it down once the second draw started on the 27th of December. They've shut it down. Now, I'll get to forgiveness here in a second, but that's part of the qualifications. You got to be able to demonstrate that you can get forgiven. Some of the forgiveness requirements, since we're going to get into that eventually in the next month or two, if you got a PPP loan, your employees should have remain on the same level of number of employees. If you fired a bunch of people, then you've got different sections or different qualifications for forgiveness of the PPP loans. It's a way more complicated than I thought it'd be, but it's based on full-time employees, the calculation. So if you let somebody go, rehired somebody, that's fine. If you let somebody go and didn't replace them, you might have your forgiveness step down a little bit. Now they've changed a lot of the rules on the forgiveness. At first it was 75%. You had to keep paying your employees 75% of your normal payroll costs. They cut that down to 60. They changed it from 8 weeks to 24 weeks. And that's actually an election you can take. If you want to use the 8 week, you can. So when you applied for your first draw, you got a certain amount and you had certain forgiveness requirements. This latest tax bill applies all the forgiveness extras to your first draw. So there are extra bonuses or extra things in there you can use to get forgiven on this first draw that you took, including group health insurance. You weren't allowed to use group health insurance to apply for the first one, but now you can use it to get forgiveness for the first draw. So lots of other things on there, PPE software, so like your MLS fees counts in that 40%. Supplier costs, maybe your stagers, things like that, those count towards forgiveness now. It used to be just rent, mortgage interest, or utilities, your home office expenses, a portion of that. Now it's all of these other things. And if you were looted or had some vandalism during the wild Yorba Linda riots, you could take that for some of your forgiveness as well. Check with your bank on when to do that. Like I said, every bank is kind of shut down on the forgiveness portion. They'll open it up, and you've got 16 months to apply for forgiveness. The 16-month thing is when actually the PPP loan has to start being repaid. So probably a good idea to get it forgiven before you have to start making payments on it. The big news that came through on December 27th, the omnibus spending bill. was that they made the PPP program totally non-taxable. Not only is it forgiven, but it's non-taxable as well. And there was a big fight in the accounting world over this. June, the IRS came out and said that yes, it is going to be taxable. It's a forgiven loan. Anytime there's a cancellation of debt, it is taxable. And then Congress finally stepped up and threw that in the bill. Kind of went under the radar, but when I was doing planning appointments in December with some of my bigger clients that took $700,000-800,000 in PPP loans, that was going to be taxable. We were starting to plan for that and give estimates out. They changed the rules on December 27th, fully forgiven, fully non-taxable. It is really free money to do that. If you qualify, it's a great program. I'm not going to touch into the forgiveness forms too much because, like I said, everything's online and you're going to end up not knowing what form to file anyway. If you go into your bank to get it forgiven, they'll file the correct form for you. So Schedule C filers, you really shouldn't have to do much. It should be fully forgiven. Not a lot you have to do other than go through the forms, supply your 1099s, that kind of stuff to the banks, and they'll get rid of it. Okay. The EIDL is still out there. If you haven't taken advantage of this, this is a loan. This is not forgiven. This is not taxable. It's cheap money, 3.75% over 30 years. If you can take advantage of that still, they have reopened that program. Now, the EIDL has been around for 7 or 8 years. They just applied COVID as part of that disaster part. And I don't know how to read into this, and I don't want to get into too many politics, but you can use COVID as an excuse to get the EIDL loan up until 2027 now. I don't know what the government's trying to say by that COVID is going to be a problem until 2027, but you can use the COVID excuse to get this loan. How much you get is defined by kind of what they want to give you. In my experience so far, it's been mostly due to revenue. They'll take your revenue number. It's supposed to be 6 months of operating revenue. So they'll take your revenue from your most recent tax return, and you can get up to 50% of that in a loan. So, for instance, I applied and got it a certain amount that was pretty nice amount, but because there's no collateral on up to 25, I only went up to 25,000. I didn't want any to get into my personal life, showing my personal returns or showing my credit report or anything like that. So I just took the 25 grand, and now my house, future house, and my car are not in jeopardy of being taken from the government. So, this program's out there for people who are struggling, and I didn't want to take all of it. So deferred payments for a year, the interest is still running, the juice is still running. I did make an interest payment last year. Just an example, if you took a $50,000 loan, it was $250 payment for 30 years. I did the math on that. 30 years, $250 a payment. That's about $90,000 overall on a $50,000 loan. So while it's low interest, it's still quite a bit of loan. It's out there to support you and help you. There's no prepayment penalties if you want to pay it off early. If you have a good year, I suggest getting that paid off as soon as you can. EIDL. Can I get additional funding? Maybe you can. If you already got the EIDL loan, they are offering reconsideration, and these are generally for people who are really still in bad shape. I have, just for instance, a client that does he's a ticket broker. 90% of his income is from NHL and NBA tickets. Obviously, he hasn't had an income in almost a year. And not only that, he had to give a lot of refunds last year. So he's talking going from about 2.5 million in sales every year to negative 500,000 on his tax return. So he's still struggling, and I convinced him to try and reapply for some more money for operating costs and whatnot. There's how you do it. If you want to try and get more money, the bigger the sob story you give them, these are people approving this, not computers. So You send that email to pdcrecons@sba.gov, and then COVID increase in the subject line, your original loan application, and then just give as much information as you can. I'm still struggling. These are my costs. My revenue is down 70%, something, a sob story. My mom died, whatever. The more you can give a chance to the SBA to be empathetic with you, the more likely you are to get it. Now, that said, I haven't seen anyone get extra money yet. And the people that have gone through the reconsideration process are still in the reconsideration process. They're focused on getting first loans out. So it takes a little bit more time, but the more you give them, the more likely you are to get a little bit more money out of it. As far as relief options, other relief options, keep an eye on these websites. California had a grant that ended yesterday, the California Relief Grant. I checked the grants.ca.gov website last night and just typed in real estate, realtor, and broker. Nothing came up. Sorry. But keep an eye on these kinds of website, congressional district offices. I'm signed up for notifications for District 4 and 5 down here in South Orange County. They are really great at pumping out little loans here and there, little relief funds here and there. I know they had a restaurant one for $5,000 of free money if you're a restaurant to get outdoor equipment for outdoor dining. Local city chamber of commerces have stuff all the time. Affiliations Association, if you're involved in like a BNI or something like that, Lions Club, American Legion, these are groups that filter down the money from Congress to your congressional district, to your city, to your affiliation groups. Keep checking out for stuff like that. Get on some notification lists. You might get 1,000 to 5 grand, 10 grand, something like that. They're out there. Everyone's trying to help. The government's, much as I hate the government and have devoted my life to fighting it, they're doing some pretty good things as trying to get money out to people and try and keep people out of trouble. Okay, so that's the loans. A lot of information. I'm still under an hour, so I'm going to shove a few more things at you for your own business purposes. So structuring is probably the number one thing that I see people could take advantage of. A lot of different tax structures. Check with your tax guy. There's something for everybody in the real estate world. There's lots of different things, lots of different entities are useful in the real estate world, whether it's an LLC for a rental property. Sometimes sole proprietorship is better if you're really trying to shove a lot of money into retirement. That might be a better option. S corps are my specialty. I try and get most of my realtors to get into an S corp to shelter money. There's the qualification. If you're making more than $40,000 in commissions, you really should think about going from a sole proprietor to an S corp or a C corp, depending on how much a lot of this is based on income. Bottom line is, if you're still filing a Schedule C and you've got commissions of $50,000, $60,000, which, gosh, could be one house in Orange County, could be 3 condos in Orange County. You're above that. Talk to your tax guy about structuring, and if he doesn't know anything or she doesn't know anything about why you should be an S corp, or at least be able to have a conversation about it, you probably need to upgrade your tax person. Theoretically, you're making too much money to just be a sole proprietor. So get a good tax guy, and whether that's me or someone else, I encourage you to not do stuff on TurboTax, especially a year like this, where there's all kinds of little relief packages. There's all kinds of reconciliation forms, a couple of them at least, that everyone is going to have to do. This is probably the time to find a tax guy this year. So I encourage you to do so. Then I'm going to mix in some life hacks on how to stay organized here. If you get your business degree, you know that your advertising should be about 10% of your revenue. Your accounting costs should be about 1 to 3% of your revenue. So if you're making $100,000 in commission, you should probably expect to pay about $3,000, somewhere between $1,000 and $3,000 for your accounting, for tax returns, for bookkeeping, for payroll costs, all that stuff. Keep it in that range. If your tax guy's charging you $15 $2,500 for your S corp return, he's got too big of an ego. You probably need to find somebody that's a little bit lower price that's on your side. Okay. So some hacks on just staying organized. And I did this to last time I was in person at the Keller Williams office. This is the one I gave. So I'm just going to kind of recap what it is. The easiest way to keep things separate is to get a separate bank account. My assistant here, Cassie, will always say, keep the linguine and the spaghetti separate. If you're doing everything through one bank account, then you got to sort through and pick out which linguine and spaghetti, and you may not remember something that happened 12 months ago. If you got the business bank account, it separates business is business, personal is personal, and you can just print out at the end of the year. I'll get to that in the next slide. There's ways to just take that information and sort it out. You close that. There's ways to sort out your bookkeeping a little bit better. As far as receipts go, I don't ever want to see a shoebox full of receipts. There are certain receipts. My advice is don't pay things on cash. Use card. And heck, I'll give you an example right here. My assistant made me do this. That says personal. That is my business card. She's very, make sure you're the one that does the point of sale. When you're at Costco, is this for a showing or is this to feed the kids? Is this for an open house expense? And if you decide at the point of sale if this is a business or personal, man, it makes your life easier the rest of the year trying to organize for taxes. Okay. The only receipts really, having as much audit experience as I do, the real receipts they look for are meals and maybe any questionable groceries or vague items. If I take a $500 Costco charge, I'm going to try and use that as a business expense for an open house, for a showing for one of you. I encourage you to bring me as many expenses as you can and let me be the one to say no. Be aggressive on one as a business expense. Maybe you buy a television for your living room. Maybe you're showing properties on that television. So I try and get as many business expenses as I can. The meals, they really do want you to write out who you were with, what you talked about. So I have an envelope in my car, one at the office, and one by my nightstand. At the end of the night, when I have a receipt in my pocket, I throw it in there, and I just throw them in a box and never talk them again because they're already on my credit card statement. But if I need the backup 2-3 years from now, I have it if I need it. Okay. So once you've separated out your business and personal expenses, and again, in a second bank account, sole proprietor account, or an S corp account, doesn't cost you a whole lot of money to get that, and it'll keep you organized. And then what we do as a tax firm, we'll download a whole year's worth of bank statements into Excel. We'll categorize the Excel spreadsheet, shove it into QuickBooks, or we'll just download a QuickBooks format. All the banks have different ways of downloading this stuff. Download the QuickBooks format, shoves right into our QuickBooks. And in QuickBooks Online, which is a little expensive, it's about $40 a month to keep that. But you can set it up for rules. So it knows Costco gas is fuel. You don't even have to categorize anything. It'll do it automatically when you set the rules up right. And we here can set the QuickBooks Online up for you and let you operate it, set up those rules for you. We'll do it for $150, $200 to do the first couple months of reconciliation for you and let you run with it, and then we clean it up at the end of the year too. So lots of different hacks to get organized. Once you get from there, I'll just touch on that. Make sure you get your home office. You all have a home office. Make sure that gets on your tax return. I see too many tax returns without it. And like I said, be aggressive with expenses. If you can justify it as a business expense, I'm all for it. Make me say no. Disneyland, hair and nail appointments, those are generally not business expenses. Gym memberships, not a business expense, those kind of things. But bring it to me. Let me be the one to say no. Okay. So once you download all that information, now you've got a summary or a little bit of an amateur financial statement. And that's really all we need as a tax guy. You might need the financial statements, more formal stuff for some of these PPP, EIDL loans. You might need, for audit purposes later on down the road, you might need to keep some financial statements more formal. But for tax prep, a simple summary. I mean, you can pull down an example of an income statement. Very easy to do once you're organized. So staying organized is half the battle. I suggest going in there and downloading that bank statement for the last 12 months as soon as possible, because sometimes you can't go back further than 12 months. Sometimes it goes back 18 months. If you're trying to do this from July for last year, you may not get all your expenses in there. You may have to go do some digging. Last couple slides here. I create a budget. It's empowering to have a budget. Know what your personal expenses are. How much do you spend on your car payment, your car insurance, your rent, your utilities? It's very empowering to know that number. What's your net? What is, is it $3,500 a month? Do you need $8,000 a month to live, just for your basics, for your home and stuff, for your kids' school and what? Empowering yourself with this budget is a huge tool. I can't express it enough. And I didn't learn this until probably 10 years ago. And I've kept a budget on an Excel spreadsheet on an iPad for 10 years now. So I think it's on an original iPad, actually. Starting to fail a little bit, but knowing your budget is empowering. And lastly, I'm going to leave you with this. Really, I promise, it is okay to have a savings account. So every commission you get, I get asked all the time, how much should I put away for taxes? You guys as real estate agents don't get a refund. The only time you get a refund is if you paid too much in estimates. The best way to explain it to someone who normally has to pay every year because you get commissions is if you put 25% of whatever commission you make away and set it aside for taxes, your refund is going to be what's ever left over, what you didn't have to pay. And there's your discretionary funds to go take a trip to Hawaii for a Keller Williams sales meeting in Hawaii. Always using expenses as best you can. Savings accounts, again, I use myself as a personal example. This is the first year in about 10 years that I've been able to put some money away. And I started a traditional IRA this year, just threw $6,000 in it last year over a few months period. That's going to be my savings account. Well, as it would have it, picked a couple of good stocks. So that's $6,000 now, $20,000 in 9 months. So savings accounts aren't bad. And it doesn't have to be just a regular savings account. It can be a portfolio account. Open a traditional IRA, as you get a little tax deduction for. A Roth IRA, you don't get a tax deduction now, but you never have to pay taxes on it again. So you can throw $6,000 in there, but have a separate account for your taxes as well. And I hate to leave it on a downer, but I already mentioned one of my clients looks like he's going to pass away in the next week or so. They're already talking about pulling him off a ventilator from COVID, and his wife is, she's not very skilled, so their business has been shut down for a couple months. And really sad story. They don't have any income, and they don't have a lot of savings, even though their tax guy has been preaching, hey, put some money into, let's start a 401k for you guys. Let's start an IRA. Let's get some sort of money. And I could see it for the last 5 years that they've been out over their skis. Their big house, really big mortgage. They have a lot of equity in it, but being house rich and cash poor is not the greatest position in the world to be in. Especially during these fun times that we're into. Your doctor says diet and exercise. Your accountant's going to say start a 401k, start a retirement plan. Do you know what your retirement plan looks like? Are you going to be selling houses when you're 75 years old? Let's start working on that, especially since things are going so well in the real estate market right now. I hope that you all are killing it. I really root for my clients, and I celebrate the successes with them. I will never shame anyone for having to pay too much taxes because they made too much money. So that's never a bad thing. I hope you take something out of that and at least start a little something. like I said, the stock market's not a bad place to be in right now. Throwing a couple bucks into AMC was a fun fun morning on Friday morning a couple weeks ago when I woke up and things had gone up 10 times. So I'm a proponent of savings. That's about it. If you need anything, I'm going to stick around for another 15, 20 minutes. You want to ask some general questions. There's not a whole lot of people in the room, but if you have more specific questions to your needs, I do free consultations. I'm getting tougher and tougher to see this time of year, but we've got quite a bit of referrals in the last year, and I'm really proud of that. I'm humbled by it, that people trust me with their stuff and to tell their friends about me. I appreciate it, and I'm thankful for the Keller Williams office. I think the Wilkie family was the one that got me in there, and I thank them tremendously all the time, because I think I have probably 15 or 20 of you Keller Williams agents between Tustin, Brea, and Yorba Linda, and I'm open for more. So thank you again for having me. Colleen, I'll unmute you and